Welcome everybody to Business Ethics and Social and Corporate Social Responsibility course. This is our second unit. Today we are going to learn about business ethics, corporate social responsibility and sustainability. The first thing to explain will be the definition of business ethics and corporate social responsibility. We have a lot of different definitions in this area. So one of them would be business ethics is the study of business situation, activities and decisions where issues of right and wrong are addressed. Another definition could be corporate ethics should be regarded as an indispensable part of corporate societal responsibility in private market economies and not something which is merely nice to have. And this in addition to the economic responsibility for corporate profits. There is ethics inside the company, which would be the one referred to the ethics of the people who make up the corporation. But can we talk about an ethics of the corporation? I mean, ethics of an entity. I'm not talking about ethics of the professionals who are working in the company, but the company, the corporation itself. Adela Cortina says that not only individuals are morally responsible, but also companies. And we consider that it is possible to talk about ethics of corporation for at least two different reasons. Because the organization extends over time and it's not reduced to the sum of its individuals. And because the conduct of individuals is greatly influenced by the character of the organization in which they have to act. As Kenneth Goodpaster recognizes, individuals are the ones who establish the policy of the corporation, of course. But these decisions are not merely personal. These are decisions made by and in the name of the corporation. Obviously, we don't want to dilute individual responsibility, but recognize the different responsibilities and put them in their place. We can consider two levels to better understand the company, to better understand the idea of how the company is also a moral agent. The aims of the organizations. All organizations have emerged in a given context to solve a problem or satisfy a social demand, as the internal good says. And it is this demand that gives it meaning. A problem today is that in many cases, the purpose of the organization has been lost sight of, or it has been confused with personal motivation and short or medium-term objectives like external goods. Here lies the key to the social responsibility of organizations. A hospital must cure the sick, a university must train professionals, a museum must promote culture. Judging the aims of the organization is the first step to talk about ethics in the organization. The second level refers to the means to achieve the ends. At this point, a serious problem is when it is understood that the only relevant means are economic and technological strategies, and where the ethical perspective is not taken into account. Normally, it is assumed that the limitations of organizations are at least three types: technological or technical, economic, and legal. The problem is that the legal restrictions do not fully reflect ethical issues and may even be contrary to them. For example, in one country, it may be legal to hire children to work, like in Bolivia, in these production facilities, but we do not consider that this is an ethical act. Philanthropy was born at the beginning of the 20th century as a way for companies owners to carry out of charity for those who needed help, marginalized or poor people of that time. In the 50s, the corporate social responsibility movement began to develop with the idea that companies have a responsibility beyond simply donating their surplus money to charity or social actions. They have to do good to society, contribute beyond what is legally required. And in the 70s, business ethics appeared as an applied ethics which studies companies and their activity, seeking to generate a reflection on their behavior and trying to establish values, norms, procedures, and instruments for their ethical development. The framework for reflection and moral analysis of the company is business ethics. Within this framework, we study the concept of corporate social responsibility as a way for the company to respond to the demands that society has on it. That is, to give an account of what it does and what it doesn't. There are many ways for companies to respond to this social responsibility. Among them is philanthropy, which would be what the company does with the money it earns. In other words, CSR is how the company earns its profits, and philanthropy would be how it spends them. Here you can see different definitions of what is social responsibility. It's the evolution of the concept. In 1953, the concept focuses on carrying out actions that are desirable for society. In the 70s, the social responsibility of the company is the increase in benefits, the value of the shareholders. In 1973, responding beyond legal techniques or economic requirement is the aim of CSR. In 1979, CSR talks about economic, legal, ethical, and discretionary expectations. In 1980, CSR is focused on obligations beyond their shareholders. In 1987, they focus on beneficial results for all the stakeholders. In 1991, the focus is in company and society because they are intertwined. In 1997, the definition is focused on obligations to society. And in 2004, different concepts appear relating to philanthropy, business ethics, corporate citizenship, sustainability, environmental responsibility, and others, and refers to in general, the institutional, economic, political, and social context in which companies are immersed. In 2001, what would become one of the most iconic definitions of CSR was established, the definition offered by the European Union Green Book. CSR, for this statement, is a concept whereby companies integrate social and environmental concern in their business operations and in their interaction with their stakeholders on a voluntary basis. Now we can talk about from the characteristic of the CSR concept. The general idea is to go beyond individual profit to contribute to a better society. Voluntary means the option to incorporate social and environmental concerns voluntarily in the sense that it's not legally imposed, and that is must go beyond the laws enforced. If the state imposes practices, then it's no longer social responsibility, it would be legal responsibility. Integration is one of the traits of CSR. That means that CSR initiatives must be integrated into the day-to-day running of the company in all its areas, in contrast to social action or philanthropy, which consists of developing social projects with the company profits, that is, what the profits are spent on. CSR, on the other hand, must be integrated into how money is earned and how things are done day to day. Consistency means initiatives must last over time and not be a simple fad. There are two reasons why CSR should be a long-term project. The first is credibility. If a company is not consistent and coherent in its CSR initiatives, it will lose the trust of society. And the second reason is that the development of CSR initiatives in themselves requires time. Transparency and accountability mean that organizations must choose to assume their responsibility towards the society in which they operate, and they must be willing to diligently and truthfully report on their actions and decisions in key aspects for the stakeholders. They must be willing to listen to the demands of these groups, to respond objectively and clearly, and to allow themselves to be evaluated by them. This means giving an account of their impact on society, not only economic matters, but also in social and environmental matters. The triple bottom line is that publishing all material information in the CSR report is an essential feature of a responsible company. Participation means dialogue. The essence of CSR is to understand the company as an actor within society and as an institution that must be legitimized through communication, in contrast to a concept of the company that considers itself as an independent or even opposed and in conflict with society. The responsible business must be willing to participate in rational dialogues with affected groups. Dialogues in which 1. There is symmetry of information. 2. The value of the best argument prevails and not force or threat. 3. The truth is told and is consistent with what was said. And 4. There is a genuine desire for consensus, for agreement. Let's look now at the different types of responsibilities that a company has. The first responsibility is has to make money, to generate profits, to pay its employees. The second is to comply with the legislation of the place where it operates, including tax, labor, and environmental legislation. The third is the social responsibility, which, as we have seen, is voluntary, goes beyond the law, and is consistent with the business activity that is carried out, and also is dialogical in the sense that it listens to and responds to answer to its stakeholders. And finally, it has a moral responsibility, which is none other than compliance with human rights. Moral responsibility is what we call in philosophy the horizon of meaning for acting. The closer we are to fulfilling human rights, the more responsible we will be. The further we move away from fulfilling them, the more immoral we will be. The last aspect that we are going to talk about today is sustainability. So, what is sustainability? Again, we can find a lot of definitions, but we can say that the majority of them agree in one thing. Sustainability is the ability to meet the needs of the present without compromising the ability of future generations to meet their own needs. So it emphasizes a balance between environmental health, social well-being, and economic stability, often referred to as the 3 pillars of sustainability. Sometimes these two concepts, CSR and sustainability, are used indifferently. And of course, these concepts are related, but distinct at the same time. Both aim to promote ethical, environmental, friendly, and social responsible business practice, yet they differ in focus, scope, and application. Here's a breakdown of their differences. About the scope and focus. Sustainability is a broad, holistic concept that focuses on balancing environmental, social, and economic dimensions across all sectors of society, not limited to business. It seeks to ensure the long-term health of the planet and communities by promoting resource efficiency, reducing environmental degradation, and supporting social equity. Corporate social responsibility specifically applies to businesses and refers to a company's responsibility to operate ethically and contribute positively to society. CSRs involve voluntary initiatives taken by companies to improve their financial, social, and environmental impact. About the difference of their objectives. Sustainability. The goal of sustainability is to create systems and practices that allow present and future generations to thrive within the Earth's ecological limits. Sustainability initiatives focus on enduring impact such as reducing carbon emissions, minimizing waste, and fostering community resilience. The object of CSR, in contrary, is to enhance a company's social license to operate by aligning business practices with societal expectations. It aims to build a positive corporate reputation through participation and transparency. Let's see the difference about the long-term versus short-term approach. In sustainability, often emphasize long-term strategic planning, focusing on the outcomes that will benefit society and the environment over time, such as achieving net zero emissions or transitioning to renewable energy sources. Instead, CSR can sometimes be short-term or campaign-based, with activities aimed at addressing current issues or fulfilling immediate community needs. But ideally, CSR should be a long-term approach. About measurement and integration differences. Sustainability typically involves measurable goals, such as those outlined by the UN Sustainable Development Goals, for example, which we will introduce in other unit, and requires an integrated approach across all the agents in their operations, universities, public government, companies, NGOs, and so on. CSR is often seen as an initiative of a company, where CSR teams may implement specific programs that contribute to social good, but aren't always easily to measure, because impact measurement is very difficult to do. I want to close with some examples of activities that are in the field of sustainability that are different in the CSR field. For example, in sustainability we have redesigning products to be more energy efficient, implementing circular economy practices, reducing emissions, and using sustainable materials. CSR can be created, for example, your own code of ethics or your own CSR report. You could apply an ethical hotline in your company, configure an ethics committee or a compliance committee, organize, for example, a community volunteer program, or offer gender equality or ethical leadership training for your employees. So, in summary, while sustainability is an overarching approach to ensure long-term environmental and social health, CSR is a business-specific concept focused on a company's ethical responsibilities to its stakeholders. That's all for today. In the next session, we will talk about the different kind of ethical problems we can face in business activity. See you soon.